Picture a piece of paper. It might have intricate designs, important-looking faces, and official-sounding words, but at its core, it's just paper. This is fiat money. It holds value not because it's inherently valuable, like gold, but because a government says it does. Think of it like a promise backed by the government's authority. Fiat money isn't something you can hold in your hand and say, this is worth something because of what it is. Its value comes from trust. Trust in the government that issues it. This trust is what allows us to use fiat money to buy goods and services. This system, as ubiquitous as it seems, is a relatively recent development in human history. For millennia, societies relied on things like gold and silver, commodities with intrinsic value as currency. The shift to fiat money marked a profound change, one with far-reaching consequences for the global economy. Understanding fiat money is crucial in today's world. It's the lifeblood of modern economies, influencing everything from the price of bread to the value of our savings. We often use the terms fiat money and currency interchangeably, but they're not quite the same thing. Think of it this way: currency is a broader term. It encompasses anything that's widely accepted as a medium of exchange. Fiat money is a type of currency. It's just one form that currency can take. Other forms include commodity money like gold and silver, and cryptocurrency like Bitcoin. These all serve as mediums of exchange, but they derive their value in different ways. So all fiat money is currency, but not all currency is fiat money. It's a subtle distinction, but an important one to grasp. When we talk about fiat money, we're specifically referring to government-issued currency that isn't backed by a physical commodity. This distinction helps us understand the unique characteristics of fiat money and how it operates within the broader financial system. Imagine a bank. It doesn't just hold on to all the money you deposit, it lends out a portion of it to other customers. This is the essence of fractional reserve banking, a system that's intrinsically linked to fiat money. Here's how it works. Banks are required to keep a fraction of their deposits in reserve, known as the reserve requirement. The rest they can lend out, creating new money in the process. This new money is then deposited back into the banking system, allowing for even more lending and money creation. It's a bit like a magic trick, but instead of pulling rabbits out of hats, banks create money by multiplying deposits. This system, while seemingly complex, is a cornerstone of modern economies. Fractional reserve banking allows for the expansion of the money supply, which can fuel economic growth. However, it also carries inherent risks, such as the potential for bank runs and financial instability. One of the most talked about aspects of fiat money is its relationship with inflation. When we hear about governments printing money, it refers to increasing the supply of fiat currency. This increase in money supply, if not carefully managed, can lead to inflation. Think of it like this. If there's more money chasing the same amount of goods and services, prices tend to rise. This is a simplified explanation, but it captures the basic principle. Inflation erodes the purchasing power of money over time. What you could buy for $1 yesterday might cost more today. This is a major concern for individuals, businesses, and governments alike. Central banks play a crucial role in managing inflation by controlling the money supply through interest rates and other monetary policy tools. Finding the right balance is a delicate act with significant implications for economic stability. Section 5. Gold, silver, crypto, weighing alternatives to fiat. Fiat money isn't the only game in town. Throughout history, various forms of currency have been used, each with its own strengths and weaknesses. Gold and silver, for instance, have long been prized for their scarcity and intrinsic value. Cryptocurrencies like Bitcoin are digital assets that utilize cryptography for security. They offer decentralization and transparency, challenging the traditional centralized model of fiat currencies. The debate between fiat and its alternatives is complex and multifaceted. Proponents of gold and silver argue for their stability and inherent value, while crypto enthusiasts tout decentralization and security. Ultimately, the choice of currency is a matter of trust and perceived value. Each system has its own set of trade-offs, and the best option depends on individual needs and preferences. Section 6. Fiat's allure. Exploring the advantages of a government-backed system. Despite its critics, fiat money has become the dominant form of currency worldwide. This isn't by accident. Fiat systems offer several distinct advantages that have contributed to their widespread adoption. One key advantage is flexibility. Governments can adjust the money supply to respond to economic conditions, theoretically smoothing out booms and busts. This is in stark contrast to rigid systems like the gold standard. Another advantage is ease of use. Fiat money is widely accepted, convenient for transactions, and easily divisible. You can use it to buy groceries, pay bills, or invest in the stock market, all with relative ease. Moreover, fiat money facilitates government spending and economic intervention. Governments can use fiscal policy, such as infrastructure projects or social programs, to influence economic activity. These advantages have made fiat money an integral part of the modern global economy. Section 7, Fiat's Achilles heel, unveiling the drawbacks. While fiat money offers advantages, it also comes with inherent drawbacks. One of the most significant is its susceptibility to inflation. As we discussed earlier, the ability to print money while offering flexibility can also lead to a decrease in purchasing power if not managed carefully. Another concern is the potential for government manipulation. History is replete with examples of governments debasing their currencies for political gain, leading to economic instability and hardship for citizens. Centralization is another point of contention. Fiat money gives governments and central banks significant control over the financial system, which some argue stifles innovation and limits individual freedom. Moreover, fiat money is not backed by a physical commodity. Its value is derived from trust in the government, which can be fragile, especially during times of political or economic turmoil. Section 8. A history of collapse, fiat systems and the cycle of debasement. The history of fiat money is a cautionary tale. Throughout the ages, numerous fiat systems have emerged, flourished, and ultimately collapsed, often due to the same fatal flaw debasement. The Roman Empire, for example, faced rampant inflation and economic instability as emperors reduced the silver content in their coins to fund wars and lavish spending. This debasement eroded public trust in the currency, ultimately contributing to the empire's decline. In more recent times, the Weimar Republic of Germany experienced hyperinflation in the 1920s, when the government resorted to printing vast sums of money to pay off war debts. The result was economic chaos and social unrest. These historical examples highlight a recurring theme. When trust in fiat money erodes, so too does its value. This cycle of debasement has been a recurring feature of fiat systems throughout history. Section 9. The future of fiat navigating uncertainty in a changing world. The future of fiat money is uncertain. Technological advancements like the rise of cryptocurrencies are challenging traditional notions of money and finance. Central banks worldwide are exploring digital currencies, seeking to harness the benefits of blockchain technology while maintaining control over monetary policy. The global economy is becoming increasingly interconnected, with digital transactions blurring national borders. This raises questions about the long-term viability of traditional fiat systems. Will fiat money adapt and evolve, or will it be replaced by new, decentralized forms of currency? Only time will tell. One thing is certain, the world of money is changing, and the future of fiat hangs in the balance. Section 10. Conclusion. Fiat money at a crossroads. Fiat money, a concept both simple and complex, has shaped the modern world. It's the lifeblood of global commerce, yet it carries inherent risks and a history fraught with collapse. As we stand at a crossroads with new technologies challenging the status quo, the future of fiat money remains uncertain. Will it adapt and evolve, or will it be relegated to the annals of history? Understanding fiat money, its strengths, weaknesses, and history is crucial for navigating the complexities of the modern financial world. Whether fiat money endures or gives way to new forms of currency, one thing is certain: the evolution of money is a story that's far from over.